Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 4th of March, 2023, and this is the weekly technical analysis for spot gold and dollar yen for the second week of March. And as you can see, the inverse relationship between two, the precious metal has been trying to climb up higher, while after a strong move up for the yen or dollar against Japanese yen is starting to potentially pause and retrace a bit. And likewise, because the spot gold has also fallen significantly since the start of February. Okay, let's kick off with spot gold here. And on Friday, has managed to break out above the intermediate resistance at the 1850 after falling through towards the second half of last month. Managed to climb back up on the Friday, even with better than expected ISM services PMI at 55. But however, there was further comments from various Fed presidents across the states speaking out about potential rate hikes and perhaps staying at smaller increments at 0.25 rather than 0.5, as the recent economic indicators for CPI and PPI were still high and at elevated levels. So there's still concern among the analysts that the Fed could raise at a higher quantum again after dipping down to 0.25 the last rate hike. So we'll see. There's a lot of conflicting views, and we'll see in the couple more weeks where the FOMC will meet and decide on the next rate hike. Next week is the just the non-farm payroll report that's of significance, and the week after that is the ECB, and only the week 2 more weeks after that is going to be the Fed and the Bank of England's turn. And however, for this week as well, the BOJ will be in the mix together with the RBA. But for now, on Tuesday, the spot gold did find support after hitting the daily 200 EMA here and bounce straight away and climb up to test the daily 55 EMA, pause on the Thursday, and finally on Friday managed to break through, climb above. We'll see if it's sustainable. And it's probably a valid time for it to make some retracement, as it has fallen quite a bit, and it could be trying to retrace back to the 38 pip retracement to 1864. Above that, it could retrace all the way back to the 50 pip at the 1882 area. Now, if we move this swing move from this area where it made a significant swing move back up higher, then it did dip to the 62 pip retracement and then climbing up and approaching the 38 pip retracement area again. So which is possible with these swing highs up here, and that's at the 1870 to 1871 levels. and currently it crossed over 1850 and closed at 1855. So this could be a possible area. So we could adjust this fit to this area. Right, and on the weekly time frame, that's definitely a bullish engulfing here for the week, and there should be some continuation move with momentum on its side, and likely approaching the 38 pip retracement. So that's a possible target here. So let's move this up here now to 38 pip area and move this next resistance at the 1900. That's a critical resistance, and below that that's down here will be the key support with the 1800 and the daily 200 EMA, which has been proven to be a strong support, and intermediate one at the 50 pip retracement. Okay. All right, so we'll see how this correlates inversely with the US dollar index, the DXY, and see whether DXY has stayed neutral or whether it has fallen lower. Let's switch over and compare that. And here's the US dollar index, the DXY, where, as you can see, it's all very tightly bunched for the week with a very neutral stance, and not able to break out higher or break down lower, and stuck between the 105 resistance, critical resistance above that, and below that support from the daily 55 EMA, where it did dip to test it on Wednesday. It dipped to just below the 104. Okay, and a major support is still very safe below at the 103, and right at the 62, right at the 50 pip retracement area at 103. So not very decisive yet, and still holding back on the breakout. And 105 is the critical one that needs to break out higher above, and also the swing high, the recent swing high in January. It needs to break above these regions here. So this zone here needs to break out higher if it's going to recover further. And the FOMC is only going to meet in a couple more weeks. So next week there's only non-farm payroll news, and also the RBA and the BOJ announcing their rates and monetary policies. But the US dollar breaks down lower. It needs to break down below the 55 EMA and the 62 pip resistance area, and coming down to test the 103 back at the 50 pip retracement. But for now, it's still just consolidating and narrowing into a triangle. On the weekly time frame, It's a very narrow range and also within the previous week's range. So forming a harami, just waiting for breakout now. So we could just draw this consolidation trend line here. Trend line. So narrowing into a symmetrical triangle. All right, we'll see if next week is able to break out higher, and it's also settling around the 786 and the daily 200 EMA. So fairly tight grouping centered around the daily 200 EMA. Okay, so let's move back to the other major pairs. Let's move on to the dollar against Japanese yen. It was not able to reach the resistance zone up here. Near the 137.70 area. And it paused and then pull back on the Friday, and it's expected to pull back with after such a strong move for the month of February. So it's likely on a weekly time frame, you can see that there's a pause here on the spinning top after a strong move from a higher low and continued higher for 4 weeks. So the fib, it just tried to cross over 786, was not able to test the swing high of mid-December. So the 62 fib retracement is still going to be an interim support level with daily 255 EMAs converging. Below that is a more stronger support. And right above that, the swing high area. Just above 138. All right, so this week there's the BOJ, and with the new governor, we'll see what their rate and monetary policy decisions are on Friday, and then later that night in the US, there's the non-farm payroll report, which came out for the previous month, was much better than expected. So we'll see what happens this coming report for the previous month's data. So pretty much bounded by the resistance up here and a strong support down here. That could be a test of the 135 again, but we'll see if that's strong enough to hold up and provide some key support and new buying. All right. So fairly neutral week in a fairly tight range of for the yen compared to previous weeks. And we'll see how the price action is for the US dollar for this coming week, and we'll compare that with the other major pairs as well. So do check out my other video on that. So have a safe week and a good trading week, and cheers for now.